Good morning, guys, and welcome to the Camp Financial Stock Market Update for Wednesday, July the 4th. So the markets kind of started out the new year as we expected. They took off. Most of the stocks in the S&P 500 are green yesterday. Just taking a quick look at the heat map. Utilities were down a little bit, but we got a lot of green in there. I mean, there's definitely some bright red, but there's some bright green in there too. S&P 500 ended up 0.85%. Nasdaq was also up 0.85%, and the Dow was up 0.6%. So, going to see a little more risk on trade, where people are going to kind of trade out of some of the Dow stocks and into some of the smaller stocks, a little more risky stocks. So just something to keep an eye on. I don't think it's anything of concern, really. The one thing that I would say is expect a very volatile January. I think, if you listen to one of my previous videos, you would know that I said I think a lot of people were waiting to take profits until 2017 due to hopes that the presidential change and the fact that Republicans are running all aspects, the House, the Senate, presidency, that people are hoping for lower tax rates, which may lead people to take some of their gains, or it may not. I mean, they may hold off, but I think that's probably what you're gonna see, going forward. I mean, let's take a look though at the heat map. So, all in all, I would say be prepared for a choppy January. We may have some really good days, we may have some really bad days, and we'll definitely have everywhere in between. But I still think that this market has legs, especially if the tax piece comes to fruition. That lower corporate taxes, you're going to see you're going to see earnings start to tick up. And then the kind of outsized price to earnings multiples that we had started to hit toward the end of last year, where it looked like a lot of the stocks were overvalued. Maybe they're not going to look overvalued, and you're going to see money start to be funneled back into the system. So just a few thoughts on the market as a whole. Let's take a look. So biotech did real well yesterday. Oil and gas, the pipelines did well. Refiners and marketing did real well. The independent oil and gas companies, you've got a major swing. You've got some in there where I see a up 4.1%, and I also see a down 7.86%. So we may start to get to see the benefit of people, companies actually, not the rising tide raising all ships. We may start to see some differentiation on companies that are not making money. They may start to feel the pain versus companies that are continuing to do well in this environment, and their stocks to take advantage of that. So healthcare plans, Humana is bright red in there, but again, a sector that was pretty green. All the financial credit services, looks like they were all up yesterday. Visa, MasterCard, American Express, PayPal, you name it, they're all Capital One, that's the one. The total system services up almost 5% yesterday, so big day there. Wholesale drug companies, McKesson, Cardinal Health, Amerisourcebergen all up, between 3.5% and 5%. Kroger down 2.29%. That one's an interesting one. I talked about Kroger a while back as a stock that I liked at $30. Obviously, it's rallied back up above when it. I talked about it when it was bottoming back in, I think it was August, September. I said I like the stock below. Once it finds its base and can get set and start to bounce back up, I like it around $30. So you'd be up about 10% on that from since then. But even with it down 2.25% yesterday, Kansas City Southern still dropping. A lot of that's tied to concern around Donald Trump and the Mexican border. That's one of their main shipping roads is through Mexico. So, if our trade becomes difficult with Mexico, they're definitely going to suffer from that. So, Ford down in the auto manufacturers up 3.79%, and Nike was up 2.26%. Nike's one that I like for this year after its really rough year last year. I feel like that's one of the better stocks in the Dow for this year. Not that they've really innovated anything, but I'm sure that some things are coming. I'm not involved day to day with them, but historically they've been such a strong company. I just feel like that's probably a good safe company there as well. So financials pretty much all green. Technicals or technology green, other than got a few red spots in there. Mostly smaller companies, other than Nvidia did finally sell off, which based on their last year's run, that could very easily, the 4% drop it took yesterday could very easily just be profit taking over what they've done in the last year. I'm actually going to pull Nvidia up real quick. So the chart I'm looking back only goes back to April of last year, but if we go back to April of last year, actually I can see the 52-week low. So give me just a second, I'll pull that up. So its 52-week range is $24.50 to $119. It hit just under 120 right before the close of the year, and has pulled back about 20% since then. So I think what you're definitely seeing there is a lot of profit taking from a company that's up 400+% over the last year. So if you were part of that ride, kudos to you. That's a nice gain. Book some of those profits and move on, because that's you don't see 400% gains in a year very often. So I know I wasn't part of it, but it's been a pretty interesting one to follow. So with that, we're gonna leave it there for today. We won't go into any stocks in the sector or in the systems or anything. I didn't see anything big happening yesterday in our portfolios. So that is it. So take care, and we will see you guys on Wednesday. Or today is Wednesday. We'll see you guys on Friday. All right, take care.